So, hello guys, a very interesting market this week. It's probably the very first time that we have observed the market or the market moves, how volatile the market is during a war. And I'm going to share some observations that I've had on the market, some outlook that I have of the indices going forward. And let's begin with the very first observation. You all must have heard about this phrase, right? That history repeats in the market. I have one such example for you right here. And do let me know how many of you all did notice this. Okay, so let's just understand what the market happens. Okay, like I want you to understand one thing. Our last high was this point, right? And before this fall that we got this week, what was the last low? The last low was this. And after that, after this movement, all right, after this movement, what was the new high that we got? I'm not saying this is a higher high. Obviously, it is not a higher high, but this is a significant high. And all right. And after this, what was the next significant low? Or you could say, in this case, it's even the lower low. It's around this point. In terms of percentage, observe. I'm taking just a high of this and I'm dragging it down to the point of this low. And how much is that? That's around 11.78%. Now let's do it for let's do it again for the second swing high and low. I'm taking this high, dragging it down to the point of this low, and it's around 11.7%. It might be much closer, but because I'm doing it manually, there's some kind of a small error that could take place. But do you see the accuracy, or do you see the whole term of history repeating taking place? The market corrected by 11.7% at this point and then gives an upside. The market again over here corrected for 11.7%. And I do not, by don't get me wrong, I do not mean that the market is going to go up like it did in this scenario. Anything can happen. But could we have, on this basis, bought over here? We could have, but I didn't do it. And if you did it, that's great. But I hope you understood this very first observation, because it's important going forward that when things like this happen, you should take a trade on it. And now let's look at another part. So whenever I get confused in the market, like if you see this week was very confusing. What I do is that I zoom out. By zooming out, I mean I go on a higher time frame and I try to look at the charts in a much broader aspect. And if I have a broader aspect, you'll see that the market has a double top being formed, right? Even the neckline has been broken. But this does not mean that I'm bearish on the market. And we'll see how things go on Monday, and I'll give you my levels just in some minutes later in this video. Now I'm using a tool that's called as the trend-based sub extension. I'll take the last swing high, last swing low, giving us a retracement of this level. All right. And what do you observe? Do you observe that the market almost nearly retraced from this level of 1? And that's just using for level. If I go on a if I go on a lower time frame, what was this low of this market? The low was a consolidation that had taken place over here. It was also 16,200, round number again. So this was a crucial support that had taken place in the market. And after this, the market gave us a very strong buying in the market again. So now what are the levels that we have? So firstly, I want you to have no bias in the market. Going forward tomorrow, I don't want you to be bullish or bearish in the market, because there's a lot of news that's going in the media. There's a lot of videos or a lot of text messages that are being shared constantly. So if there's one thing I want you to do is I want you to get away from all of this. I want you to just look at the charts, at least as a trader. For an investor and you have other things planned, you could try that. I'm not one to advise you in investments. But when it comes to being a trader, I want you to ignore every media that's out there. I don't care. I mean, I'm sorry, but as a trader, you shouldn't really care about what's going on in the news. We'll come to know whether the market is opening gap up or gap down to 10 in the morning. And that's more than enough to let us know what to expect. That's why we have levels both on the upside and on the downside. So now let's come to our 1 hour chart. So what's crucial about here is this last consolidation that happened over here. This is going to be a major support. So assuming that the market opens flat, we are not going to be bearish until this consolidation zone is broken. Now, if this consolidation zone is broken, all right, then we can be bearish on the market. And when I'm saying bearish, I don't mean a new all-time low. I mean a new recent low. But I mean that you can take a trade on the downside, because let's say that the market opens flat and it breaks this consolidation, right? You see this important level, why this is an important level. Let's say that it breaks and it closes above this. We get a good trade of, say, something like this. Like if I were to trade on the downside, I'd probably take a trade like this. My entry being here, my stop loss being just above the consolidation, and my target would be near the day's low. So not the day's low, but the previous day's opening, because there's liquidity here that can actually do some buying kick in. But let's say the market opens on the downside, or let's say the market opens somewhere around here, somewhere around here, somewhere around here. What do? We don't take a trade. We'll wait for structures to be formed. Now understand that even if the market opens lower and it keeps falling, we don't plan to take a trade over here, over here, or over here. When we plan to take a trade is when the market gives us some kind of retracement. And when this retracement is broken, this is where we'll go short in the market. Because when this happens, you have a very particular risk to reward system. Your stop loss could be just above the retracement. Your target could be anything. Now understand that the market is very trendy on whatever direction. So we are not going to take our standard, 30, 40 points target. We need to trail our targets, because this is the market where you can trail your targets and have really, really good profits. So don't keep fixed targets. The only thing that I need to keep fixed are fixed stop losses. So that's on the downside. And on the downside, what levels can we expect, or what levels am I expecting? So the very first level that is drawn right in front of you is 16,440, 16,440. Now the reason why that is that, let's zoom out. Do you see that we had good buying in from here? We had good buying in from here, and the market did not really respect it this time. But now this level, when I'll come back, is going to test this level again. And understand another thing, all right, that all round numbers are a very crucial level. For example, 16,500. I'm pretty sure if you go and look at OI data, there's already a lot of put writing on 16,500. So even 16,500 is going to act as a very good support. So if the market opens downside, all right, and it comes at 16,500 and it gives some kind of retracement, we are not going to go long here, but we are not going to go short also. You're only going to go short on a proper retracement. Now understand that normally what happens is that some retracements just become a W and then it goes up. So when you can see that a W is being formed, don't take a trade on the short side. And let's say if 16,500 is broken, we come up to 16,450. And if this level is broken, I'm going to be completely bearish on the market. Till this level, I can still, expect that, okay, a W might be formed, the market might go up. But if 16,450 is broken, I'm completely bearish for the day, all right? I'm not giving you a positional view. You know me that I only take, maybe if I'm trading Nifty, I might be targeting around 100 points. So if when I'm saying bearish or bullish, understand I'm only telling for the next 100 points. So if 16,450 is broken and I take a trade, I'll easily be aiming for 16,350. But in this case, I think if this level is broken at 16,450, the market can easily at least go to 16,200. And if it comes at this level, there's no chance, there's very less probability that it might break this in one go. What would rather happen is, again, it'll come here, it'll consolidate, and then it might break. So if we are going to be looking for short, and if it's around this level, we need to exit and re-enter only after this level is broken. On the upside, what do we see? On the upside, it's very, very simple. Understand that if the market opens flat or gap up whenever, you see this major gap, all right, with this, the support, the earlier support, all right, support. This support is now going to act as resistance. So let's say that the market, let me come at a lower time frame. Let's say that the market breaks this level, all right. Do we get a proper trend line? Let me check. Oh yeah, we do kind of get it. All right, let's do it. I'll draw it like this because for me this is a false breakout. So that's why I'm cutting the candle. So let's say that we get a flat opening, and after that the market gives us an upside. I'd go long over here, keep my stop loss something like this, and where would my target be? just below this low. Like I told you, 100 points in Nifty, you should be aiming it because you're also risking 60 points, 50 points in Nifty. Now is not the time we can keep a small stop loss. And again, now is the time we can have higher targets. So on the upside, this could be a very fast target. And if let's say that I don't trade on the upside over here. If I don't trade on the upside over here, what I'll do is that I'll be looking for trading on the downside at this level, that is 16,800 to 16,840. So let's say that the market comes here, gives us an upside. I don't trade over here. But if I see like a double top taking place over here, or some kind of breakdown that's happening over here, I will definitely take a short position over here. My stop loss would be really, really small. And my target would easily be, uh, next day's opening. So if the market opens here, goes up, and if I shorted wherever the first candle's opening is, like let me draw it for you. Let's say if the opening was this candle, all right, the low of this, the very low of this candle is what my target would be. Now that would depend. I can't tell you where the market is opening tomorrow, but I hope you understand my point. But let's say that this level, the market breaks this level, all right. The market breaks this level as well, 16,800, 16,850. Then there's a very, very good chance that the market is going to gap fill. And I say gap fill, what level do I mean? The market goes and breaks this. It will definitely consolidate here if it's not going to fall. Because the market cannot give you a one-side momentum on the upside. That's very unlikely. And when you're getting a one-side momentum, it's very hard to go long at any of these levels because then you don't know where you can keep your stop loss. So if the market breaks this level, all right, there's a very high chance that the market is going to go higher and give us this gap filling. And trust me, when this gap is filled, understand a lot of selling is going to take place. So if you're going long at these levels, you can easily target the gap fill. But understand, never ever take the target dot gap filling. Keep a buffer of maybe 10 points, 15 points, 20 points. Keep your target below it because this is also happens as a trap. The market knows that a lot of people are going to keep the target as gap filling. So they'll bring the market to maybe 10, 15 points and then reverse the price. So if you're taking along at these levels, the target should be 10, 15 points below the gap. And let's say you don't want to trade on the long side at all, and the market does come at this level. Same thing I told you over here, like double top, breakdown. Same thing you'll be looking over here, and you're looking for a short position. So now I give you the scenarios of Nifty, multiple scenarios, and I'll only be trading the market if this scenario plays in. If there's any other scenario, I'm not going to take part in the market. And I want you to form such similar plans. If there's some other plan that you have, you just make sure that you know about the plan. And if things happen according to plan, then do take a trade. But if not, then do not initiate a trade. And that's why I'm reiterating to what I've told you. I've given you my scenarios of what I'm expecting Nifty can move and how can Nifty can move. And I'll only be trading if any one of those happen. I have a plan for the upside, I have a plan for the downside. And it's not like I will only buy above this level or I'll only short below this level. You have seen that I am willing to buy at these levels as well. You've seen that I'm willing to sell at these levels, at these levels. So that's how I plan to trade in Nifty tomorrow. And if nothing happens to that, we'll close the screen. We do not need to look at Nifty. You don't have to trade every day. Now let's look at Bank Nifty. Now Bank Nifty, yeah, you'll understand why I love Fibonacci when I'll show you Bank Nifty. I'll take the low and I'll take the high. Where did the market retrace from? Or where did the market bounce from? Sorry. 0.78611. Correct. Did I trade this? No, I don't trade such stuff. I don't try to catch bottoms. But anyways, now the levels are right in front of you. And if you come at a lower time frame, you see that the Bank Nifty was actually making, or I would say was in like a triangular pattern. It gave us a breakdown over here from a gap down. There are chances it might come here, give a retest and go downside. That's one possibility. But anyways, let's look at the levels that I've drawn and why have I drawn them. So all this area, this was actually support, but market didn't respect any support over here. But understand that if the market does come on the downside again, it might give support to this area. And what is the extreme? See, any days closing, any days low is very important. So this, you see this region is also very important. So if the market is on the, let's say we're shorting, this level is also very important. And then we have our major support area. If this breaks, God save us. So on the upside, what levels do I have? Now see, why do I have this level? Do you see how badly was this candle hammered? This candle opened over here. It went as low as this, but it closed right about. It shows how bullish this market is and how many buyers are sitting over here. So that's why this level was important for me. And same thing, now let's go on a lower time frame, and you'll see that the market has been consolidating and this region has been acted as a support. On the lower side of this region is the days, is the first 2 hour closing of 24th February. So it's a little similar to Nifty 50's position where I told you that if the market opens flat or if the market opens here, we'll not be bearish until this level is broken. But bullish will be the same thing. Over here, we didn't have actually a fake out, right? Like here, if I draw the trend line of closing about, this trend line, that means that we can go long. And if we do go long, what would be our target? And what would be our stop loss? A stop loss would be it's too high a stop loss. But yeah, this is the proper stop loss that you're seeing is around 167 points. So when you're having 171 points, your target should at least be 200 or something. Now the reason over here, our first target will definitely be this high that was made, that was 191. And above that, if you want to go, then your target could be something around this level, because this is another important low. And understand that, what did I tell you? There is a chance that the market might just retest this trend line and go lower. So that's why I don't want you to wait till the exact trend line top. I want you to give some buffer and get out early. So on the long side of the market opens flat, this is where we go long. On the downside of the market opens flat, this below this level will go short. Same thing, the short is just like Nifty. Short somewhere over here, our stop loss will be just above. Our target here could be easily around this low. All right, if the market opens flat, that is. And let's say that if the market opens gap up, again, if the market opens gap up, we'll wait for some kind of structure to be formed. If the market opens gap up, all right, and the market tests this level, we'll wait for the gap to be filled. We'll only go long somewhere at these levels. But let's say that the market opens gap up and starts moving higher. If we get a shorting setup over here, like again, same thing, double top, some kind of breakdown at these level that's near the trend line resistance, then we'll go short over here. How would our stop loss be? Our stop loss would be just at whatever the recent high is made tomorrow. And our target could, trust me, I mean, you could take targets like 100 points or something. But like I told you, this is the market where I like to be a little aggressive in my targets. I'd keep my target as gap filling. And if this does not happen and the market moves higher, let's say the market does move higher, then will I go long over here? No, I'm not going to go long over here. I'm going to wait till this gap filling happens. Same scenario in Nifty. I'm going to wait till the market comes at this level. And at this level, again, if I get a breakdown, I will trade this. I might actually go double my position when I trade this, because this is a very good setup. There's so much strength in the market after such a good one-side momentum. After this gap filling, we'll get some kind of downside. When I'm saying downside, I don't mean that the market's going to be bearish. I'm saying that we'll get a good downside for a trade. Understand, all my views are for tomorrow. My views are small targets, they're not positional views. So I'll take a trade something like this, and my target I would trail my target. I would not even keep a fixed target. On the downside, if this level is broken, you know that market is going to go lower. And let's say that if the market opens somewhere gap down over here, very simple. We will wait for some kind of retracement. Let's say if the market opens here, give us a retracement. We'll only short at the retracement. Now, see, for me, this level is important because this was one. Last day's opening was around this level. A flip level for the previous day was this level as well. The market came here and then gave us an upside. So this level, this area is crucial for me, and I'll be comfortable shorting only after this level is broken. So let's say if that Bank Nifty opens gap down, goes downside, I will not go short until this level is broken. If this level is broken, then I don't mind going short. Stop loss is very simple, just be above the consolidation. Now, I can't tell you exactly where the consolidation will take place. Now, what would our target be in this scenario? Our target would be around this level. And why is it this level? Because there's consolidation that's taken place here. Is also where the strong upside came in. And you see this level, support, support, support. This can again act as support. So that's why we'll get out around 300 points or something. But if this level is broken, this, okay, 37,700 is broken. Understand? Completely bearish. Every rise, we are going to short. Understand? So there are two terms: sell on rise, buy on dip. What does it mean? What is buy on dip? Let's say the market is moving upside. So if the market is moving upside and it gives a dip, we buy on every dip. We buy on every dip. And what is sell on rise? The market is falling. On every rise, we sell. So there's a rise, we go short. There's a rise, we go short. And this is the level. For a sell on rise, this is my level. If this is broken, I'm going to be sell on every rise. And for Nifty, I did give you, right? And for Nifty, it was 16,400. 16,400 is broken. Below that, sell on every rise. But we cannot, there's no buy on dip level. I don't have any buy on dip level. Now let's say that, I mean, a very high, less chance, but during the market, we just have some news that the war is over or something like that. Very, very unlikely, but let's say some news like that comes, then we could be buy on every day. But otherwise, there's no level on the charts that I'll advise you to be buy on every rise. So yeah, that is it for tomorrow. This is what you can expect from the market tomorrow. I've given you my market plan for tomorrow, and I hope you're able to, not just you, but both of us are able to end tomorrow in green. So good luck for tomorrow. Good luck for this week. And just a last advice that I'd give you: don't watch news. Don't uh, follow everything that's going on Twitter or whatever on your social media handles. And if you're a small player, if you're a small trader, don't trade this market. Even if you have a view, don't trade this market, because if your capital is less than 1 lakh, this market could blow your capital. And understand that as a beginner, goal is not to make money. Goal is to preserve your capital, be in this market, be in this game for the long term, because in the long term, we all are going to win. So yeah, see you on the next video. Thank you for watching.